Welcome to another lesson of AlgoLab. Today, we will look at how to select final strategies for our strategy incubator. But let's start with a short disclaimer as every lesson. Everything you will see in this lesson is intended solely for studying how to work with StrategyQuant software and is not an investment advice at all. We have completed the robustness tests and now we will look at how to select our final strategies for the strategy incubator. We build strategy incubator so that we have a sufficient pool of strategies from which we can later select the ones for our final portfolio or multiple portfolios. There are two ways to build a strategy incubator. You can either deploy the strategies directly on a demo or live account, but if you trade like hundreds of strategies, this can be very demanding in terms of execution and management. The second option is to save the strategies to disk and retest them after some time. You can also test them directly in the platform to verify the strategy backtest. I always recommend doing this before deploying a strategy to a large real account to make sure the backtest matches the results in StrategyQuant. So let's take a look at how we will select the strategies. We have to switch to StrategyQuant. We have 7 strategies left here, and I will go with you step by step through how to choose the best strategy for our strategy incubator, which is, as I mentioned before, it's kind of a storage place where we store strategies and we can build it in 2 ways. Either you deploy the strategies directly on a demo or test account with small positions, or you can simply save the strategies to disk and return to them after some time simply by doing a backtest. But what I always recommend is before deploying a strategy is to test it directly in the platform so you can make sure that the results will match. When we go to our strategies, I will now show you how to choose the ones that we will deploy on our account or that we can save to disk. When I check it or when I go through it from the perspective of Monte Carlo analysis or according to the metrics and some tests, I kind of like this strategy. Before the year 2017, it didn't really do much, but it also didn't lose that much, and more or less I can tell that the strategy is built for higher volatility. When I look at the others, they are very similar, only the development of the equity curve changes in some way. If I will have to choose a strategy just by looking at it, then I would not probably deploy this strategy. But the key is not to pick one perfect equity curve of a strategy, but the goal is to build a strategy incubator for different markets and gradually build the basis for our strong uncorrelated portfolio. We have already once filtered strategies according to correlation before, but now you can approach it a bit more sensitively. We can verify the correlation in 2 ways, theoretically, but because Portfolio Master in the trial version of StrategyQuant is limited only to 4 strategies, in this case, that wouldn't be the way and we have to do it manually. At least you will know how the correlation analysis is done, so I think it's a great opportunity. When I select the strategies here and I click on Portfolio and Merge Strategies, then I have to choose the data bank into which I want to merge a portfolio, and I simply click OK. A portfolio is created. I double click on the portfolio and choose Portfolio Correlation. I'll click on Analysis and the portfolio will be calculated in just a minute. And here I see when I expand the strategy that 411 is not correlated with 438. So I have to find these 2 strategies in the list below, 411 and 438. These 2 strategies should have low correlation, but it is of course always necessary to verify it. So I will test them. And when we look back at the portfolio, then there is one more strategy, I guess, that is not correlated. But those 2 among themselves correlate with 438. So what I'm going to do now is I try to merge these 3 strategies. I can tell that the correlation is high, but I can approach it in 2 ways. Either I define the total risk for a certain sector or market and then distribute the risk among more strategies, or I simply define the risk for one strategy for the whole market or sector. This is one way how we could filter strategies. I would deploy these two strategies that are not so correlated with each other. Of course, there exists further robustness tests that we can further apply and evaluate strategies. However, I will not show those to you in this video. There are so many of them. But I will show you one more method with which you can verify strategies. But basically, these two strategies we could evaluate for deployment on some test account and then try to combine them into a portfolio. When I choose one of them, let's say this one, then we can also test strategies manually, and that's simply in Algo Wizard. We have the strategy loaded here, and I can see this condition, and I have here the entry level where the pending order is placed. And now I will try to test the strategy. I will try randomly changing the parameters plus minus 30%, and the goal is that the strategy doesn't completely fall apart. This is kind of a manual test, but it gives us an idea. When we change some specific parameter, the strategy does not immediately break down. So here, for example, we try the Forex period at 29 and we try to test it. Since we build strategies directly from templates, we minimize the risk of overfitting. Of course, the risk is still here, and we must be careful whether the strategy is not overfitted. So, we have the results here, and I see that after changing the parameters, the course of the equity curve changed, but it did not fall apart. We can try testing also at the value 19. Let's wait for the result. And again, as you can see, the course of the equity curve changed, but not that much. We can put this parameter back and try another one. We have here another one like highest. So what happens when we change the parameter, for example, to 30? We try again the backtest. The equity curve changed, but the strategy did not fall apart. That's great. Now we try the value 45. The backtest is done, and I see that the equity curve is still very, very similar. And what happens when we change here, for example, the value of the profit target to 6? I change this value back to 38, and I try the backtest. Even after changing the ATR parameter, strategy still holds together. As you can see, this is one of the robustness tests you can apply. Basically, we would choose these two strategies. What I like about these two is that they survive even large parameter changes, which is always good. And now I will show you a little trick that we added into StrategyQuant, which will help you test more markets with just one click. So let's take a look. It is a new option within the auto retest task that you maybe already know. If you wanted to add a task, it is specifically this one. We add it into our custom project simply by clicking at it. And for now, it is not very visible, but using this configuration text field, I'm able to enter here all the symbols, one after another, that I want to test within the strategies that are in this data bank. Another test you can use is multiple markets at once. And let's look at how these strategies are profitable on other markets, and we will try to test it right away on all indices. Also on markets like USD JPY, gold, GBP JPY, or let's try also Euro USD. But we could also add here, out of curiosity, GBP USD. We click and copy this line. Please take into account that the symbols you enter here must exactly match the names that you have in the data manager. It's very, very important. When we go back, then we have these symbols set here. And what is also important to mention is that you set the test parameters so that they are tested from instrument, because different markets contain different settings of slippage, spread, swap, commissions, and for example, so minimum distance. Therefore, if we choose this option from strategy then the same slippage in points or pips would be applied, and that could have a significant impact on our profitability. Therefore, we must set instrument here. And the settings ensures that the backtester looks into the instrument for the default value and tests the strategy above that. Now we will try to test these 7 strategies on these markets, and we will see on how many they will be profitable. And now you can see I just have an error there. One S is missing, and you see that it is really key. It's necessary to have the symbol set exactly. So I click again OK, and it will take a moment until the backtest finishes. So the backtest finished, and as we see, here we have the results from these 7 strategies that we tested. We suddenly have 63. When we sort it by Sharpe ratio, then we see that even some strategies are on another market, specifically USD/JPY, equally or similarly profitable. The course of the equity curve is different, but considering the basically when we look also at the 7 strategies that we originally had at the beginning, then only about 4 are not profitable. When we then look at it from the perspective of the portfolio, not from the one specific adhere curve, we can choose here one from each strategy. And you see that the strategy is really profitable on multiple markets, so basically the one we selected also performs well on other markets. Also, let's make a visualization through markets. When we merge these strategies together as a portfolio, click OK. The portfolio is created down there. And as you can see, there are different markets here, and we see the course. When we look at it from the evaluation of the whole logic, then even the 7 strategies that we had at the beginning are in some way profitable also on a completely different uncorrelated market, USD/JPY. So that was the little trick at the end for the new features. And in the next video, we will look at how to deploy strategies into our platform. If you like the video, give it a like and follow, and we will see each other in the next one.